Ben Antonucci, welcome to the show. Here's a little rule.
Yeah.
You can't talk until I introduce you. Okay? And you kind of messed it up, but it's fine. So, as we all know, to all my thousands and thousands of followers and fans across the globe, this is Off Market. This is what the show is called. It's called Off Market, where I'm going to talk about some off-market deals that you've done. I'm going to talk about real estate in general in upstate New York. We're going to talk about things that we're doing, things that we're currently working on. We're going to talk about how you got started. But I'm going to just say it out loud. Guys, I'm real excited for this show because Ben has been a buddy and a pal of mine for a long time. He's got such a cool story. He probably doesn't think it's that cool. I think it's really cool. And anyway, without further ado, Ben, welcome to the show, my friend.
Thank you for having me. This is exciting. It's not every day you get to have a conversation with Marty Grizzanti.
Come on. Come on. You can call me anytime. But no, here's how I wanted to start the show.
Yeah.
I wanted to, because I know you very well, and we've had a couple beers together, a couple Two Tree, a couple cigars. But for people who don't know you, tell me, and I want you to really get into it because I don't want you to, you can hold whatever you want back, but I want you to talk about how you started and talk about really, you thought you were going to do one career, right? You thought that was what you wanted, but then you completely pivoted. And I thought this is my favorite part because of just the willingness and the courage to do what you did. So anyways, go ahead, buddy. Tell me how it all started. Tell everybody about yourself.
Yeah. So I started in real estate in 2015 after going to school for way too long. So I went to
go ahead.
Yeah, I started in college in 2009. I went to Fisher, had no idea what I wanted to do. I went to literally go play football, and that was it. Partied way too much. Decided my sophomore year, beginning of my junior year, I need to figure out what the hell I was doing with my life, and decided that I wanted to be a physical therapist. So I applied for PT school. For grad school, ended up getting in, went to school until I was 25 and had a ton of debt. I got out and I was excited to finally start making money. I was, at the time I was working at Walmart making $13 an hour.
Wait, hold on. This is crazy because you're in college. Mm-hmm. Your major you didn't think about physical therapy until sophomore year, right? Or junior year? Okay. Yeah. And you go, all right, this is a career that I'm going to go and take. Mm-hmm. It's different schooling, obviously, right?
100%. Yeah.
It's completely different. So you're like, I'm going to double down on this. Mm-hmm. And what happened? Like during the college, year in of PT school, where you're like, this is not what I want to do? 2 years?
No, not at all. Not at all. I was in it and it was a grind. The first year was awful. But we ended up getting through it and I was excited to get out. And I'm like, yes, I'm going to start making good money. At the time I was I think I was making like 55 grand a year. To me at that time, after making like $13 an hour for the past 7 years, I was like, hell yeah, I'm going to be loaded. I can't wait to start. I got into it, started working 40 hours a week. 6 months later, I'm like, what am I doing? Like this isn't working. I was paying student loans. I had a mortgage, and it was like, I would walk away with like $1,000 a month. I'm like, I didn't go to school for 7 years, get a doctorate to literally scrape by. This is ridiculous. My student loan payment was, if I did the 10-year payback, it was like $2,700 a month. It was outrageous. And I'm like, there's got to be a different way. There's got to be a better system. So I started looking into alternate investing, and I had a 531 plan for my daughter. And I had it for 5 years. I was stacking away money and looked at it after 5 years. And I ended up losing money on it somehow. So I was like, again, what is going on? Like, this is so rigged. I have zero control over what my money's doing. There's got to be a better way.
So you had zero control over the
Exactly.
that investing, right? And you had zero really control of your life. You're working 40, 50 hours a week.
Exactly. Yeah.
You don't really love it. You're not like you're working for someone else.
Yeah. Yeah, exactly. And I'm spending more time. I was spending more time with my coworkers. I'm like, well, this is pointless, you know? So, I got very lucky. So my coworker was good friends with a real estate investor locally, who was kind of a big deal. It was part of the trio there of Mark Caramana and Louis Marrero and Ricky Kotak. So Ricky Kotak was kind of my mentor. Yeah, they're great guys. They did a ton of business, and he kind of mentored me through the first deal. And you know what? It was absolutely terrifying. I found a house on Craigslist. It was on Penhurst Street. And at the time, I didn't know about lenders. I didn't know how to properly invest. So I took a bank mortgage. And I think I purchased a house for $45,000. And then out of pocket, between closing costs and the down payment, I had it was like 15 grand into a $45,000 house. So I'm like, all right, let's just do it, you know. And I ended up renting it, and I only put like $5,000 into it, and I was renting it for like $1,000 a month, making like $200-300 a month on it. So
sweet.
But after that first one went down, I started learning. I luckily found the real estate investment group where you and I met, and learned some tricks of the trade. And then once that first one went down, we kind of ramped up and found lenders and started buying more and more and more, to the point where, as of 2020, I was able to walk away from my job because I had enough cash flow, and it was great. And man, I was scary, but holy cow, I can't even think about having a 40
Isn't that
hours.
Crazy to think about it now?
Yeah. I look at my friends and I'm like, man, how do you do it?
Now we do work 24 hours a day. It feels like, right?
I mean, you certainly can. And trust me, when I first started, I was putting in 80 hours a week. I was working 40 hours at PT, and I was doing the rehabs myself. I was literally working 80, 90 hours a week. But,
well, let's just say this though. I mean, this was a long time and a lot of effort and like a lot of hours that maybe could have taken someone maybe 10 years to do. You did in a short period of time, but you hustled hard, really hard. And you were taking risks, borrowing money, using other people's money. These are things that, you and I maybe go, oh yeah, I could do that tomorrow. Like not even think twice about. That takes a lot of courage. It takes a lot of people's, it takes confidence to do that, right? You're doing risky stuff. So I don't want to overshadow that. I want to let people know, hey, you can understand that people have some blocks of mental blocks, or oh, I don't know if I can do that stuff, but you were able to do that. Why do you think so? Why were you able to kind of take that jump and leap? Was it because you hated it? You didn't really, were you like, I just cannot do this, so this has got to be better? Was it that? Or what was it?
Yeah, it was just, it was a mindset. It was like, hey, this isn't working. I don't like what I'm doing. I have to take some risk. I have to be uncomfortable. And I just told myself that every day, that when I bought that first house, when I was in closing, I would wake up and think, what am I doing? This is going to end awful. And of course, when you go and talk to people, right, you've probably experienced that, especially family. They're like, oh, rentals, you shouldn't do it. It's a terrible investment. You're going to lose all your money. And you have all of that on top of it. So I understand the mental block of, and the fear that prevents people from getting into it. I do it. I understand completely, but at some point you just gotta, bear down and say, listen, I know this is going to work. I trust in what my gut is telling me, and I'm just going to go for it. And if you don't ever get that pass, you're never going to do it. But there has to come that day where you're saying, fuck it, I'm going to do it.
So you just double down and just telling yourself.
You got to tell yourself. Yeah.
Yeah. You just told yourself. So you were just building up that confidence. So I have a saying, there's people, to a degree, I agree with the fake it till you make it thing. Mm-hmm. But I also believe that it's more of, more of a belief in yourself because you belong. So there's a belief because I belong. My intentions are good. So I always tell this to people, why I deserve it, why I believe I deserve to reach my goals and to hit the levels I want to reach, is because my intentions are good. I know your intentions are good. So I'm sure you were probably going, listen, other people have done this that are not that great of people. I can do this too. And I'm smart. I'm just as smart and capable. I have a freaking degree in physical therapy. I was able to probably, you got a lot of confidence from going from, a drunken mess your first couple of years to, wow, I got a PT degree. I can probably do anything I put my mind to. Is that kind of true?
Absolutely. Yeah, absolutely. That was a huge factor into it.
Yeah. That confidence is a big confidence boost.
And I can't say enough about like these things. Like when I was starting off the podcasts and stuff like that, they were out there, but they weren't local. Like there's so much more that it's local now. And that RE investment group that we did back 2 years ago, that was I can't tell you how big of a help that was, because you're surrounding yourself with people that are like-minded. And if you don't have that, you're going to question every single move, and you're just that fear is going to take over, and you're just never going to take that next step.
Oh, it's so true. I absolutely agree with you to the fact that we are very lucky that I feel like we were in the coffee club. That's what it's called. It's still there. It's a Facebook group. There's not really the meetings. The meetings are kind of sporadic with different groups. One of them being the Upstate New York Real Estate Investor Group, which does meet monthly, right? I'm one of the founders of that. But I agree. We were, what a unique time to like have a bunch of just like young, hungry men and women who would show up, and we could really just share our war stories. We could band arm in arm and just go, wow, you see a guy like Matt Druin killing it. You see different people coming in like a Chris Cieslak and different people that have done bigger things. And you go, well, these guys started with one deal, right?
Exactly.
Started with a Pennhurst with you. It started with a Curlew Street for Matt and I.
Yeah.
Okay, so let's go back. So you get Pennhurst. That obviously worked out. Did you refinance that? Well, you had a traditional mortgage on that.
Yeah. So I had a traditional mortgage on that. We went and bought 4 more houses that year.
So how did you buy these next 4?
So after that, we found lenders. We looked into, we figured out how to essentially use the BRRRR method to get in and out of these houses with less money out of pocket. Can
you explain the BRRRR method in what you believe the BRRRR method is? I know the BRRRR method, you say, but what's the BRRRR method from a Ben Antonucci's point of view?
Yeah. So the BRRRR method for me is buying a house and being into it for 80% so you can get your money back. That's the whole concept of the BRRRR method. So I think it's buy, rehab, rent, and refinance is what it stands for, right? So as long as you're into the property for 80%, including purchase price and rehab, a bank will lend on that property. As long as it's performing well, they'll give you 80% of that money, of the value of the property on an appraisal. So it's essentially, if you're buying a house, right, you're rehabbing it, putting a tenant in there, and it's cash flowing $200 or $300 a month. You go to refinance and you're in it for 80%. Essentially, you're getting an asset, right, for free without any money out of your pocket that's cash flowing that somebody else is paying down a mortgage for you.
Isn't it insane?
I mean, it's insanity. It's insanity that this has been out there forever, right? And people don't take advantage of that. That is mind blowing to me. And I understand that it's scary. You're relying on other people. But at the end of the day, working 40 hours a week, you're still relying on other people too, right? It's just,
that's scarier.
That's very scary, because at any point, that company you're working for, how big or small it is, could always go under, and you have zero control over that.
It is much scarier. And here's the thing that I think is people don't think about either. It's just true numbers.
That's it.
You know what is selling around the property, right?
Yeah.
That can't be fudged. It's literally like if you're in a $100,000 neighborhood and you're looking at a house in that neighborhood that fits the same 3 beds, 1.5 bath, and you're buying that for $50,000, right? It's going to work out. It's, again, pending your rehab budget, right? I mean, but that again is a number. So it's a formula where you are literally buying assets and making money. Like you are literally you're buying money, right? You're buying money. So I think it's hard for people to really understand, because nobody's talked about this in school. Nobody talks about it. You just kind of have to just go through it and see it for yourself to go, so I'm getting a check to buy this house and getting a tenant in there who's going to pay my mortgage. I'm going to make money, cash flow on the mortgage part and all the expenses. And oh, by the way, if you do it right, which is you've done before, and I do, you're going to get a check to do so. Yeah. It's a magical thing. It's really crazy. And people really need to understand the BRRRR method. But anyways, I think people kind of gloss over the BRRRR method. Like, it's
the best way to invest. It's the best way to invest, just to get started, at least.
To get started.
Yeah.
So you go ahead.
And well, I was just caveat off of that is now that we're transitioning out of rentals and stuff like that. If you buy them right, I mean, our new strategy is if I buy a rental property, which we have a couple in North Winton that we bought, um, we're into them for less than 80%. And the beautiful thing about a refinance is when you get a check back, it's tax free, right? So you're collecting equity out of a property and you're not paying a dime on it. So for instance, we have a refi going through right now that's 8 properties, and we're going to get a $250,000 check back after paying off all of our lenders, and it's not a dollar of that is going to the government. So not
I
only
love
that,
that.
you're pulling out 80% of it, and then in 5 years you can sell that property and make the additional 20% along with your debt pay down on top of it, and only pay a fraction of what you had into it. So
That should
it's
blow
mind
out
blowing,
people's minds. Yeah, that should blow
mind blowing.
people's minds. And I think it becomes even more mind blowing when you do. He's drinking it truly.
It's noon. It's allowed.
Yeah, it's fine. When you flip a house, right? I think you see the major differences when you
Yeah.
flip a house, and then you got to make sure you're paying 33% or whatever it is on that profit.
Yeah.
In comparison to if you just burr it and you get that money, which is tax free, you don't owe that to anybody, and you get to keep the asset, right?
Yeah, and it cash flows, and somebody else pays on your mortgage.
And
It's
someone pays on your mortgage.
wonderful.
So it's pretty crazy. It's pretty wild. And if anybody watching this, wants more information, I'm sure Ben would be happy to walk you through an exact deal of how that went down. And maybe we could do that in a little bit. But I wanted to kind of continue with the story where, so now you have the confidence, you're using lenders, you're buying properties. How many do you get to where you're like, all right, now I'm going to start to get out of this? Or like, what was the next step in your mind there?
Yeah. So up until pre-COVID, right? I was like, I want rentals. I want cash flow. I want steady income. And COVID hit, and New York State is going in a direction where it's making it more and more difficult for good landlords to actually take care of their properties and get paid. So we're transitioning, and we're at 30 houses.
It's awesome.
And I'm like, you know what? I'm done. I can't deal with it anymore. And it's not like that we're in a financial crisis by any means on our end. We have probably 3 or 4 tenants that have literally ruined it for everybody for me. So
Sure.
it put a bad taste in my mouth. And at that point, I can see down the road that New York State's going to make it more and more difficult, and it continues to be more and more difficult. And I'm at the point now, it's like, I looked at my, my sheets at the end of the year, and I was making $2,000 to $3,000 a year on a house. And I'm like, what am I doing? Like, again, it was like that start when I started in that 40 hours a week. I was like, what am I doing? I'm at that point now with residential real estate. And I'm like, there's got to be easier ways to make money. So we're transitioning out of it into other assets of it. But that's a beautiful thing about real estate, right? And that residentials, is that it allows you to do that, right? You have equity, you have cash flow that's making you money that you can pivot whenever you want. And you can't really do that with other assets and other investments.
Well, there's another thought too, because you're absolutely right with that. And then also, when you buy that house, you become a business owner, right? Mm-hmm. You're the business owner of that property. And then when you have multiple, it just expands. And I've talked about this principle before, and I'll say it again, but I'm a big believer in the corridor principle, which is an entrepreneurial ideology where it's when you take that first step into entrepreneurship, right? You buy a house, you start a business. You really can't see very far in front of you. You don't really know what it's going to look like, right? When you took that initial plunge to buy Penners, you didn't really necessarily know what this was going to look like after, right? But what you're doing, so if you picture the corridor principle, literally walking down a corridor, walking down a hallway, dark hallway, picture yourself driving in the winter, and you can't see too far in front of you, but you can see just enough to take that continued next step, to take that next, that next road. And all of a sudden, other doors in that hallway start opening up, right? So when you're buying that first Pennhurst, you didn't think about doing a couple flips, and you've done quite a few flips now. Where you've made a lot of pretty good, you made pretty good money doing that, right? So now you're doing that and you go, well, I've done a flip, so I can do that. I bought a property, I burred it, and that's been successful. I've been a property manager. And now, again, they're not always going to stay open. You might close this one like you're talking about with being a property manager of residential real estate. But as you're going down this path, you see storage, you see mobile home park, you see apartment buildings, you see all these different things which carry you to that next step. But it starts with that one. So I think the scariest part for people is it's not you're missing out on an opportunity to invest in real estate. You're missing an opportunity to see what it could have, like what you could be, right? 10 years down the road.
That's such a great analogy.
Right, it blew my mind when I heard it. So that's why I wanted to share it. But let's go back. So now, you're transitioning into something which is what? You want to start doing what now?
Yeah. So we are targeting industrial space, laundromats, Airbnbs, and self-storage is our goal.
Let me hear about the Airbnb because I know you've had some really good success with this. So give me how it started in like what it looks like. What is that? How's that feel for you? Like, because again, compared to that traditional renter, right? Tell me about Airbnb. I don't have one, so I'm honestly curious.
Yeah. So we have an Airbnb on Port Bay. It's a vacation rental, which is
that's Lake Ontario.
Lake Ontario. Yeah. Okay. It's right past Sodas Point. Okay. It's different than what a lot of investors are doing with stuff in the city. They're converting rentals to Airbnbs. You get a different market than that. But for our house, we bought it actually on the market and we got a killer deal on it. When we bought it, we didn't think we got a good deal on it. But looking back now, when you look at stuff on lakes, it's unbelievable what they're selling for. So we bought it. My wife and I were just looking for a lake house for ourselves because we have small kids. We've always talked about having a lake house. We like to be on the water. So we were looking, and before we started looking, we had no idea what Port Bay was. I've never been to it, never even heard of it. And we drove up there. We drove past this house, and we were looking at like 5 on that day. We drove past this house, and my wife goes, "That's the one." And of course, it was the most expensive one. It was way over my budget. And I'm like, honey, I don't think we can get that one. Like, I know it's got everything that we want, but it's listed way too high. And this house was listed it started at $350 and it was way overpriced. Mm-hmm. It was down to $320. It dropped to, that's when we drove by it. They reduced it to $310. And we came in, we put an offer in at $280 and they accepted it.
Wow.
So we got lucky on it. And
nice.
It was a project. It was one of those things where you're like, you bought it and you're going to sit. And I said, I just want to do like 3 things. I just want to put the bathroom in. I want to put a new boiler in and this and that. Right. Yep. And then you close on it. And then you're like, well, maybe I should do this, or, well, I should do this. We ended up doing the entire house. And this house is 3,000 square feet. It's massive.
You were there a lot. I remember.
I was there for 7 months doing this rehab and I did it myself.
Wow.
But on the back end, we've got over $100,000 in equity in it. So it's like, it's hard to beat. But as far as Airbnb wise, we started in July. So we went live in July. We had 2 weeks of July. One of those weeks we were taking for ourselves. But between July and the end of November, we covered almost all of our operating expenses for the entire year in 3 months. And again, it's under rented right now. We put a hot tub into it on the back porch, which has been an absolute huge bonus for people in the winter. People literally look for just hot tubs.
Sure.
I can't tell you how many people ask me, hey, is the hot tub working? And that's the only reason we look at your place. So, but it's been a great, and literally I do nothing. It's one of the easiest business models that I've had. Wow. The key to a good Airbnb is having a good cleaner. I was lucky. I found a girl who worked at the building supply down the street. Wow. I asked her if she was interested. She said, absolutely. And she has been a godsend.
Wow. That's amazing.
Yeah. So it's been awesome. It makes a lot of money. I don't ever want to go up there because it's always rented and I don't want to block out days. But,
I was going to say, that's one of the like the added benefits though, is that like you could, by the way, it's your house.
Yeah. Yeah. 4th of July is always blocked off. I'll never rent it. I could get triple the price, but it's an amazing experience to have your whole family up there and the kids love it. They have the ring of fire up there. It's amazing.
Oh, that's so sick.
Yeah.
I love that. You hear maybe like Matt Druin would say, you're a hotel. You're a hotel.
Yeah. Yeah. I've heard him say that. He had a good experience, but
he doesn't have one. How does he know?
Well, he had one and he got rid of it because he didn't like it.
Oh, is that what?
Yeah. So he said it was way too much work. I literally don't do anything. So I can't say a bad thing about it.
No, that's great. Okay, so Airbnbs are going well. Now, what drove you to like like what's getting you excited about industrial space? Because this is the first time I've heard this from
Yeah.
you.
No living tenants and toilets. That's what's making me excited about it.
Okay.
Like, lack of maintenance on them realistically, and dealing with a little bit different clientele and economies of scale, right? So if you can buy something that's bigger, it may cost you more money, but the rent per square foot just make it much, much more advantageous versus what you're doing on rentals.
Okay. All
So,
right.
like for instance, we have a lead on one that we're trying to lock up. It's 25,000 square feet. It's big. It's
Wow.
5 buildings, 25,000 square feet, and it's outrageously under rented. It's at $1.90 a square foot right now,
Oh wow.
which is crazy under rented. So even if you're increasing to $3 a square foot, your after repair or your value of that property just went up almost double.
It doubled.
Exactly. And the same thing with self storage, which you can talk about later. But self storage is the same exact thing. If you have 300 units and you're increasing if you're increasing the rents by $10 a unit at a 7.5 cap, you're like $300,000 or $400,000 in appraisal value. On the
Yeah, it
back.
doesn't take much.
Doesn't take much.
For it to just explode in value, right?
Exactly, because the unit number just makes a huge difference.
Right. And I think that's kind of hard for people
Mhm.
when they first start to wrap their head around like,
Yeah.
Multi-million-dollar deals. But if the numbers work, it's just
Just a bigger single family house, right?
Exactly.
That's
Yeah.
what it is, without a headache.
Exactly. Yeah, exactly. And I think that's a good point where it really is less headache. And it's also in a lot of cases, some cases, less competition, right? Because how much
100%.
competition is there for a single family property that, needs work and the seller wants to sell in Brighton, right? Or in Pittsburgh. Like everybody wants that deal in Fairfield. Like all of us want that deal. I'm sure even you probably still would maybe want that deal. But
100%.
When we go past that and we think like bigger stuff, like that completely that separates people. They're like, oh, I can't. I don't even know how to start. I don't even know what to do. So I think, again, with the corridor principle, when you start going down that path, you start getting comfortable. You start talking to people like yourself, like Chris Lawrence, like Matt Druin, who are doing it, right? They're really doing it.
Yeah.
So yeah, that's awesome, man. I'm glad you're doing that.
Thanks, man.
I really do, because first of all, I want you to be successful, and I also want to learn how you're doing it. So at some point, I'm sure we'll work together on something like that, right? Maybe.
Absolutely.
And that's the beauty. And that's the beauty of this. This is the beauty of this, is that you need to, like, when you join that coffee club, like, just like me, I'm an outgoing guy. I know you are too. And maybe not so much, but you're same like me. You're an outgoing guy. You're an extrovert. We're wrestlers. We're the same kind of guy.
Right.
And what can be tough for people is like that initial first meeting, right? That first, like, going to the coffee club. You don't really know if you belong.
Yeah. Well, it's funny you say that, because I went to a coffee club meeting like 2 years ago, and afterwards I went out for drinks with my buddies, and I was like, oh yeah, I was just at this real estate meeting, and they're like, oh, so what is it? Is it like a bunch of millionaires sitting around talking about real estate? And I'm like, that is the most ridiculous thing ever, but that's what people think, right? They think that, like, I don't belong here. I'm not an investor.
Right.
But you have to get out of that mindset. It's not these millionaires sitting around talking. It's you and me. It's Joe Schmo that is sick of a 9-to-5 grind that wants to get out.
That's what I think that's mostly what they are.
100% they are. Yeah.
That's what mostly they are.
Yeah.
I think it's, and that's why they're so great, is because it's like-minded people who are just like, I'm sick of what I'm doing. And I really do think the toughest part, it just like going to the gym, is just pushing that door open, right? So pushing that door open to get to that. And again, we say the coffee club. All I'm saying with the coffee club when we say that is a real estate, networking, meeting, or a real estate meetup of any kind. Any FRIA, any RIA, anywhere are important. So yeah, that is very true. So let's keep this ball rolling, because again, this is called off market. So I have an ideology, and I think you'd agree with, where there's the law of the first deal, right? There's that law of the first deal we just talked about, Penhurst, and mine being Curlew. It kind of gets the ball rolling to buy more deals, right? Typically, when you buy one, you buy more than one. I also believe there's a law of the first off-market deal, which then gets you to think completely off the idea of going to the MLS to find a deal. I know you've had a lot of success actually finding deals on the market.
Yeah.
But, and I actually want to get into that too, but I also want to talk about what was one of your favorite off-market deals that worked out really well for you. And I know I'm putting you on the spot. You know, I don't know, was there a flip, a rental? Like obviously, like with these larger deals, these are on market, right? These are typically on market deals that you're finding through a broker. Is that how you're doing it?
No, they're off market.
Okay, so all right. So
yeah.
give me some. Don't have to name specifics, but just give me an idea of like, you know, why off markets work better for you, and maybe an example of a deal that you've done that was off market. Because, and again, I got to double down on this because people, it blew their mind when they're like, so you're creating your own market, like you're creating your own deal flow. You don't have to wait for people to bring something on your desk. Now I know that's not, again, your specialty, right? That's not like you're something.
I hate it.
Right.
I hate marketing. It's not my favorite.
And that's fine.
Yeah.
We have all different ways of life and people on here. But that's the other thing. If you've been successful, you know, not necessarily doing that every deal. But I think a lot of people have like aha moments because when you get that off market deal and you've bought millions of, what am I thinking? You bought hundreds of off market deals from wholesalers, right?
Yes.
That's an off market deal.
Absolutely.
Right. So give me an example of one that you've done that you've had success with that you like. And you can even talk about one that you're currently working on.
Yeah. So I have two that come to mind. Right.
Okay.
So when I bought a good deal when I bought it, right? So I had an off-market deal on Sawyer Street, which is like used to be one of my favorite streets in the city, and it still is. But I'm just out of the residential game for the most.
And that's the 19th ward for people.
19th ward, yeah. So back when I started investing, I was buying houses on Sawyer Street for like $30,000-$40,000.
Yeah,
they don't exist anymore.
No.
So, but there was one house in the corner that I purchased, and it's a two-family. It's a big two-family. I actually just walked up to the door and knocked on the guy's door. Oh, hang on.
Hang on. No worries. Get what you got to get. Yeah. I can talk. You can go. Go get it. So I know Ben loves the 19th ward. Sawyer Street is a great street in the 19th ward. It's a fine street. And I think probably about 5, maybe even 6 years ago, that was a very hot area of Rochester. That's where you can get some student rentals in pockets of the 19th ward. You can get great student rentals for like the University of Rochester. So it brought a lot of attention, and it still does. Ben, I was just talking about how the 19th ward is an area of Rochester that has like pockets of college rentals for the U of R. So that's why it got a lot of traction. It got pretty hot, but there's some still areas that they're not quite there yet, right? Even today. But the beauty of the 19th ward is you can use those other streets for your comps. So,
absolutely.
So a lot of times it can work out really well when you're burring. But anyways, back to your story on Sawyer.
So on Sawyer Street, I went up and knocked on this guy's house because I own the house across the street, and it was an older guy. He came out and he's like, yeah, I may be interested in a month or so. So I'm like, all right, no problem. I'll follow up with you. A month later, come to find out the guy dies. He's an older guy. The guy dies.
Whoa.
And now his son's at the house and he's like, yeah, we got to get rid of this thing. We live in Atlanta. Like we're just up cleaning up his stuff. So I ended up giving an offer of, I think it was $40,000 for the house, 2-family, 3 bedrooms each side.
Wow.
Yeah. $40,000. He's like, we can't do it. We ended up settling at $50,000.
Okay.
I put in 60 grand into it. So I was into it for 110. At the time, 4 years ago, it appraised for like, I think it was 145 it appraised for. So I ended up working out pretty well. And each side is rented for $1,200 a month.
Wow.
So this thing cash flows like $1,200 a month. It's
insane.
Great property. Now it's probably worth 180.
Yeah.
Or 170. But that was a fantastic deal.
And that was a door knock. So that
literally a door knock.
That's like the absolute most contact you can possibly do to get in touch with a seller is like that door knock, right? There's the door knock, there's the cold call.
Yeah.
The door knock is definitely the most intimate out of all of them.
Absolutely.
So
And
that
then
took a lot of gumption. And I love
that was, yeah, that was interesting. But then the other one that I had, which it only makes it a good deal now, I bought from actually Ricky, my mentor. It's in Maplewood. It's on Alameda Street. I own two of the houses that were on Alameda Street. So I was driving up and down one day, driving for dollars, and I saw this house, and it had all the metal brackets and everything on the outside of the house. It was bank owned, and I knew that it was coming to auction. I don't go to the auctions. It's a waste of my time. I don't want to compete against these gigantic people. But I know Ricky used to go. He used to go every single day. So I said, "Hey, Ricky, if this property comes up, I want it. Let's buy it." Come to find out, it ended up coming up. We bought it. He wholesaled it to me. I bought it for $100,000. This house is massive. It's 4,000 square feet, 5 bedrooms, 2 full baths on each side, and it's built as a 2-family. Each side was rented for $1,300 a month. It was making a killing. Beginning of this year, I was approached by the neighbor and said, "Hey, I want to buy it." I'm like, "Okay, well." We ended up talking, and I ended up selling it for $200,000.
Wow.
So it appraised. Right. So I'm going to pull out again. It's cash flowed probably $1,500 close to it a month. And I'm going to pull out 75 grand on the back end of it. And I didn't pay a dime for any of those expenses since then. So that's my favorite house to date.
That's
as far as
awesome.
super method off market deal. But
that's awesome.
Yeah, that was a killer deal. And that should be closing probably next week.
Oh, wow. That's great. That's great. Dang. That's, again, you wouldn't have gotten that deal unless you put yourself out there. You probably told
people. Have
people
relationships.
You make relationships. Number one is just saying to yourself, I'm an investor. Whether you have a deal or not, whether you have a house or not, whether you're living in an apartment or whatever, it's getting that mindset that I am an investor and I deserve it. I deserve to be here. Other people have done it. I can do it too. Yeah. And that might take a lot of repetition, just of, like you said, you just kept telling yourself, like, it's going to work out. I'm going to do this. It's something that I believe in. And I believe that confidence is the actual, that's the most important ingredient to be successful in business and real estate. And it's because the more confidence you have, the bigger risks that you're willing to take. Mm-hmm. And when you take bigger risks, that's when you can really start hitting home runs. Right.
I agree.
Right. So just throwing it out there for people listening, how I build confidence. One of the things I do is I keep promises to myself. So if I say I'm going to make $10 a day, I'm going to make $10 a day. If I don't, I'll know that. And that's a loss. I need to have little wins throughout my day. What's next, Ben, for you? So it's industrial. You're retired. You're kind of you're obviously retired, but not really retired. What do you want this to look like? Like, what do you want your portfolio to look like in 5 years?
Good question. I really like self-storage a lot. I really do, because of, number one, the relationships that you make with it. It's one of those things where the purchase prices are a lot higher. So you have to have partners, you have to have, syndicated deals and things like that. So I would love to transition out of my rental portfolio into something that is minimal work, where I can realistically leave it for my kids and I can do whatever I want, which I can do whatever I want for the most part now. But be able to operate my business from anywhere in the country is where I want. I want to be able to say on a Friday, hey, let's fly out to, Florida this weekend and just spend the weekend there and come back and not have to worry about a toilet, backing up or something like that. That is my goal in 5 years from now, and having something in place that can run that.
I love that. That. That's very similar to my plan, which is it's so there's freedom, right? There's freedom. That's what we initially want.
Yeah.
But then there's extreme freedom, which is for me, I want to be able to do whatever I want, right? But I also want to be able to take whoever I want with me. Absolutely. That's my thing. That's what I seek.
Yeah.
Is extreme freedom. Okay, I can do whatever I want, right? Which I can kind of do now. but I want to be able to bring people with me who probably, who can't, and just kind of show them, right?
Yeah.
And just have that kind of give them that lifestyle, because it really, anybody can do it.
And it's life changing, right?
Yeah.
I am, you know what? It's funny you say that, because I am in the same exact boat. I had this conversation with my wife the other day about how amazing would it be, right? Because we live in this world where it's like $1,000 here, $1,000 there. It's like, okay, that's fine, because we're dealing with much larger numbers. But then you talk to your friends that are in those 9 to 5 jobs, and like, oh, $100 for this, like, this is crazy. How amazing would that be to take your friends and be like, hey, like, I want to give you this advice. I want to show you how to do this, because once you're in it, it's absolutely life changing. Like, your view of the world completely changes. I have a friend that's getting married in February, and my other friend was just complaining to me because he's having his rehearsal dinner on a Thursday and he's in Boston. He's like, I can't take a third day off because I live in Boston. And mind you, this is 3 months out. He's like, I can't take it off. I'm like, that is mind blowing.
Mind blowing.
Right?
Yeah, mind
blowing. Like, I would love to get my friends out of that 9 to 5 and just show them what life and what you should, like, I shouldn't say should, but what your life could be like if you didn't have to worry about money. You didn't have to worry about going to work every day, because it's such a difference in your lifestyle, in your view of the world. It just changes everything. It really does.
It's really tough for people to wrap their head around, but like, if you really want it, again, some people don't, that's so fine. Like, if you whatever, but if someone who's like really wants it, is like, I want more, I want to do bigger, better things. And some people just can't get to their head around the fact that that's possible for them. Right.
Yeah. Some people like the security of a 9 to 5 job, and that's 100% fine.
Absolutely. Absolutely. The thing that, and the reason behind that is just, it's comfort, right? They're people are comfortable.
They're taught.
They're taught that you're in this, just like everything we've done from start to, school and everything. It's just to be an assembly worker, right? You don't want to draw outside the lines. You gotta, keep your composure. Don't interrupt, or anyways, that's really good, Ben. This has been awesome. I miss you, buddy. We got to get together.
Where's our beer meetup, man?
I know. Well,
I got to drink by myself on a podcast.
Well, we have a meetup. We have a meetup here, and I think on the 22nd or the 18th. Is that
the one? Yeah, that's the one at Radio Social.
At Radio Social.
Yeah,
so that'll be a lot of fun.
I'll be there.
All right, me too. Well, do you want to leave anybody with anything? If you could say something quickly to the group, what would you say here? Quick 2 seconds.
Yeah, if anybody's in there that is ready to dive in, I would just say, take the risk, suck it up, like, just make it happen, because if you don't do it today, you're never going to do it. You can't wait until tomorrow to do it.
Boom! That's it. That's the walk-off. Guys, I'm going to try to do these once a week, Thursdays, when we can. I like doing them. They're fun for me. It's fun to connect with Ben. It's fun to connect with other investors. It's fun to talk about real estate, upstate New York, off-market deals. So if you want to be a part of this and you think you might be able to add some value, please just ask, hey, Marty, could I come on your show? I want to get on here. Right. So anyways, thanks for watching, guys. Ben, have a good day.
I appreciate it, buddy. This was fun.
All right. See ya.
We'll see you soon.